It's Larry Gonzalez with your housing market update for the 10th of January, almost a third of the way through the month. A lot to talk about today. It's some news that's probably not going to make a lot of people happy, but you know what? With every piece of news, there's an opportunity. That's the way I look at things. But prices are up, inventory's up, rates are up. We got a red arrow pointing up. Rates are up this week. We'll get into that. Headline news, all right, headline news. This was Jobs Week. Jobs Week basically takes precedence over everything else, and it was a slap in the face to the housing market. We'll get into that. Honolulu housing market, though, proves to be resilient over the course of the year, but we may see a little bit of softening as we end the year, so month over month. Unemployment claims are down week over week and then up a little bit, but overall, nothing really earth-shattering. So we'll go into that a little bit. Let's get into the ADP employment report. This is a private sector job report. This report of the two, the one that comes out on Wednesday versus the one that comes out on Friday, the BLS, this one has been more consistent. Private sector jobs growth was below expectations. It came in at 122,000 new jobs versus 140,000 expected. Also, wage growth showed the lowest gain since July of 2021. So that's good for inflation. That's good for unemployment going up or at least staying steady. And if you look at where the hiring was, it was mostly in large companies. But the other big news that came out a day before, this was on Wednesday, the day before, JOLTS, Job Opening Labor Turnover Survey, jumped over 8 million again to 8.098 million. So that was not what we needed to start the week. And Friday came in like a gut punch. The BLS Jobs Report, Bureau of Labor Statistics Jobs Report came out, and job growth was well above estimates for the second month in a row. 256,000 jobs created versus 160,000 that were expected. That's a big difference. Now, the problem with the BLS is they've been overstating for the last 2 years job growth. All right, we expect to see some negative revisions down over the course of the next 2 months. Matter of fact, we had a minus 8,000 person revision to the previous 2 months on this report. So again, I think it's an overstatement, and a lot of these jobs are part-time jobs, so they're not full-time, and a lot of the people who are taking these jobs are under the age of 21. So really, I think this is a skewed report, but the bond market did not look at it that way. The bond market reacted, yeah, that was really ugly. Unemployment rate, all right, two parts of the BLS jobs report. You have the business and then the household survey. The household survey is where we get the unemployment report. Unemployment dropped from 4.2% down to 4.1%. And as I said at the beginning of the week in the rate update, if we saw it drop, you would see interest rates go up, and that's exactly what happened. But on a positive note, average weekly earnings were down from 3.7 to 3.6%. I don't really care so much about hourly workings. You can make $100 an hour, but if you're working 2 hours a week, man, it ain't that much. So it's what are you making weekly? Wage growth week over week is down, so that's positive news for inflation. Now, let's get into the housing report. Honolulu Board of Realtors housing report for the month of December. I don't typically compare year over year, but since it's the end of the year, we'll compare the end of this year to end of last year. So we'll go yearly update and then monthly. Median sales price steady for single family homes, down month over month, but steady overall. Median sales price for condos, though, hit a new record, $540,000 for condos. Year over year, a lot more sales this year than last year. All right, but 2023 was not a very good year. So better, but not as good, say, as 2022. And there's some reasons for that. So let's get into the yearly indicators. All right, closed sales up 9% year over year for closings, and for condos down year over year by about 2.5%. And there's some reason why. I think a lot of it has to do with, because there's a lot more inventory now. I think it's just condos, while they're more affordable, and the HOAs and the assessments going up on those are really hurting those numbers, that we can expect to see the inventory of condos that continues to go up. The median sales price gains were modest from year over year, and then really actually from up 21 days on market to 30 days on market for condos, so that's a big one. Median sales price again up 4.8% year over year, up 1.3% year over year for condos. New listings up 13% year over year for single family homes. That's good news. Condos up almost 20 at 18.9%. So looking at those numbers year over year, a much better year in 2024 than 2023. Will we continue to see that improvement in 2025? All right, so let's look at the monthly indicators. We had an increase in total number of closed sales for single family homes, but a drop for condos by about 5.5%. Median days on market was down for single family homes. Single family homes had a pretty good month going on the market, and you'd be interested to know most of the single family home sales were below 800 or below 900,000. All right, so there are single family homes below, and believe me, people see them, people are buying them. Active inventory is down. This is the first time in quite some time that we've had active inventory down. We'll get into that. We'll look at a graph here. And then, a lack of new listings really caused a drop across the board of inventory. We had a 32% drop in new listings for single family homes, a 24% drop in listings for condos. And again, that is pretty normal for this time of the year. We'll look into that here, break that down a little more. You see median days on market, going up for condos. Single family homes, not so much. Again, because a lot of the homes that are being sold, single family homes are being sold, are under $900,000. They don't necessarily have HOA dues, so those are great. The 36 days for median days on market is the largest days on market in 3 years. So something to be kind of keep an eye on. Will they continue to go up? I think if rates stay high, you will see them continue to go up. Single family homes will drop, and that was again led by homes being under $900,000 selling quickly. All right, we get into new listings. You see a big drop in new listings. And I think there's a reason why. It's end of the year. This is normal. You look at every year, 2023, 2022, 2021, you see new listings basically near the bottom, and they typically start going up after the new year. So we have what's typical. We have uncertainty over the economy with a new administration coming in, these tariff fears, not a lot of new listings. And that doesn't help us for inventory, but luckily we're going to talk about inventory right now. Inventory, while we had a slight drop in December, again, this is normal. You had lower new listings, fewer sales, but this is the normal for this time of the year. If you look on this chart here, every month, every year in December, you see active inventory drop, and it starts to go back up as we get into the new year. So it happens every December, but still, we are still at the highest level of inventory that we've been since before COVID overall. So that's some positive news there going into 2025 for buyers. All right, we had a drop in closed sales for condos. Again, just you already said a couple times, just that time of the year, the HOA dues, the assessments are really catching up to some of these people who are trying to sell their condos. Single family homes are up. And a lot of this is also due to the rise in interest rates. People are scared right now. They see interest rates going up that almost the entire fourth quarter. And then really, as we start the year, we see that too. So a lot of people are spooked. We look at the median sales price. A steady pace wins the race really across the board. Single family homes over 1 million, not coming down. That elevator ain't coming down. And then condos, again, a new high, all-time high, $540,000. So pretty good, really, median sales price for condos. That's, and I think we're primed for a breakout as soon as we see rates come down. And they don't have to come down a lot. If they come down a half a point, you're going to see a lot of people who are going to come off the sidelines and then start buying. So now that we've talked about HBR, let's talk about buying versus renting, because there's a lot of people who are so afraid to buy. And the question is, why should I buy instead of rent? Rent, it's so unaffordable. And I will tell you this, right now, if you were to buy, we're at the highest interest rates we've been at in over a year, and really about the highest we've had in about, 20, 30 years. And then home prices keep going up. So this is the most unaffordable time to buy a house ever. But why should you still buy instead of rent? One, let's go. Appreciation. All right, right now our rates are about peaked. All right, could they go higher? They could, but probably not likely. But they're pretty high right now, and home prices are still appreciating. Amortization. All right, amortization is when you pay down that mortgage. All right, your home is a piggy bank when you're a homeowner. you make your mortgage payment right now. About 35% goes to the principal on the loan. All right, that principal is your house. Your house is your piggy bank. So you're putting money into it every year and growing that savings that you have in your house while your savings appreciates, because the houses are tending to appreciate around 5% year over year. And then you have tax benefits. Let's talk about those tax benefits real quick. When you pay rent, is any of that rent that you pay tax deductible? No, it's not. But that mortgage payment that you're making, 65%, 70% is interest. That interest is deductible from your taxable income at the end of the year. You're getting a tax benefit as a homeowner, and there are other ones as well. So if you're content on renting now and you think, oh, I'm going to buy later, well, you're probably going to be renting later too. All right, because when rates come down, and you're one of those guys who's, I'm waiting for rates to come down. When rates come down, everybody and their brother's going to come off the sidelines and they're going to want to come buy a house. All right, and right now in a high rate environment, homes are sitting longer. I just showed you that. Well, sellers are incentivizing buyers to buy homes. The reason why new home sales are doing so well is because the new home builders, those home builders are incentivizing sellers with great credits so that they can have an affordable mortgage payment. All right, so sellers are doing that right now for existing homes. All right, when rates go down and you go from one offer to 6 offers, do you think the seller's going to give any credits? No, the seller's not. All right, but you can get a seller credit right now and make that home payment affordable by doing a 2-1 buy down, or even a 1-1 buy down, or 2% buy down for the first year, 1% for the second year. So a 2-1. Really, the time to actually make your offer is now, when somebody else is going to make that home payment affordable for you. And here's the other thing. When rates drop, do you think home prices are going to go down? I think not. All right, the home prices have gone up despite high interest rates now. What do you think is going to happen when rates go down? It's what happened last time. All right, and every other time rates go down, home appreciation goes up, inventory goes down. Simple. It's a law of supply and demand. There's not a lot of supply, but there's a lot of demand. There's always a lot of demand. And here's the other thing. I just talked to a couple yesterday. They are so unhappy about being pre-approved for $1 million. They wanted the $1.5 million home. Most people are not buying their forever home on their first one. All right, your first home is not going to be your forever home. But that first home could be the catalyst to you getting that forever home later. And I have another client couple that bought a home like 6 years ago. At around $1 million, and they were pretty strapped for their payment, but they have so much equity in that house now, and they are basically selling that, and they're buying another home. They're buying their dream home, which is made possible by that first home that they bought. All right, so why does buying beat renting? Because if you're renting now, you're probably gonna be renting for a very long time, and then you're going to slow down. Time is a valuable asset. We are not guaranteed any more time than we have. You have to take advantage. The earlier you get in, just like when you're investing money, the earlier you get in on investing money in your retirement funds, the less you have to invest over the course of time, because you allow time to work in your favor. All right, real quick, initial jobless claims, nothing really to talk about here. Initial claims down 10,000. Continuing claims up 33,000, so not a lot to talk about. Let's get into interest rate. We are at the highest level of 6.5% that we were really at any time in the last year. You know, at the beginning of the year, you saw interest rates start coming down, but this week, man, it was just one hit after another hit. Interest rates are back up at 6.5%. Next week is the first week look at inflation for the year. We'll see, as a possibility, we may get some good news on the inflation front, which will bring rates lower. Certainly, I know we need them as much as I just said. You know, buy a house now, it's a lot easier to buy a home when rates are a quarter point lower or half a point lower. So I'm not against anybody saving money. I'd love for everybody to save money and have lower rates. All right, what does this all mean? Hey, you know what? Mortgage apps are down again this last week. It is definitely a buyer's market in Oahu. You've seen the inventory is as high as it's been. Homes are sitting on the market. Sellers are more inclined to give seller credits now than they will be when rates go down. And I do think it's the best time to buy. But you always got to do your homework. You got to work with a lender who's going to show you the numbers. I just had this really great conversation with a client yesterday, and he was pre-approved for $700,000, but you know what? We're going through the budget. We're going through the number. I'm showing him the numbers, and he's like, you know what? $500,000 is about right. And I agree with him. It keeps him close to his BAH. He's not going to be house poor. So, and you need to have that conversation with your lender. Don't always, if you're approved for $1 million, you may not even want $1 million, all right, after you look at the numbers, all right? But it may become affordable too if you're buying a home that's been on the market for a while and you get seller credits. Sellers, stay positive. You're going to start seeing inventory continue to go up as we get into this year, as we get into the springtime season. If you can hold on to your home for another month or two, I think that's ideal if you haven't put your home on the market. But obviously, you know, there are other things that factor into that. But that's about all I have for you this week. I hope you have a great weekend. Stay positive. We'll talk to you later. Aloha from Larry the Lone Ranger.